Now, let's talk about some things that I personally like to invest my money in. Now, we discuss tech. It's a hot topic, fintech, AI. I've personally incorporated some of those things into our business strategy when it comes to investing. Now, that's the real estate side of things. In terms of stock investing, which is what I want to talk about right now, here are some places that I am currently investing and what I like to do. Now, mind you, I want to throw out this disclaimer. I am not a financial advisor, so this is merely my perspective. Take it for what it's worth. All right. That said, the S&P 500. You may have heard this term thrown about when you watch CNBC, you watch Bloomberg, you see this. That's basically an index that tracks the stock market, right, as a whole. And it's an indicator of the health of the economy. There are funds that specifically will mimic that. So as the stock market grows, now there's some investors. Let me just preface this with a quick sidebar. People sometimes want to invest in biotech. Some like to invest in financial technologies, fintech, whatever the case. However, one of the probably the most historically safe investments always carry risk, but historically safe is just investing in the stock market because it grows by around 10% a year. Now, in the S&P 500 in recent years, because some of the largest companies in the S&P 500 are tech companies with the rapid growth since, whenever there's a macro event that's catastrophic for the economy, we as a species, the smart businessmen of our society, they seem to figure out a way to create a new, better way to do stuff. It's just really how evolution works. Something dies and then comes back in a better form, right? So tech companies, whenever there's a big macro event like the financial crisis of 2008, 2009, we then got Uber, we got Facebook, Twitter, so on and so forth. So in recent years, there's been a lot of growth. Now, to tap into that growth, one of the ways you can do that is to invest in index funds, ETFs. They're basically companies that invest in companies. There's a publicly traded company that invests in other companies that basically track the S&P 500. So in other words, your portfolio could mirror, that's the idea behind it, could mirror the stock market's growth. And if you look at it over time, those ETFs, there's a couple. There's Vanguard's. The ticker is, go look for yourself. Not saying you should buy it, but just go look for yourself. I've personally bought it. VOO. There's SPY. And you can see how they've been tracking over the past 5 years as a lot of these technology companies not only grow and explode, but get to a point of maturity where there's still upside growth. That's, to me, is a good investment. Now, one of the things that actually make up a lot of the growth of the S&P 500 is what's called FANG. The acronym goes FAANG, which is short for Facebook, Amazon, Apple, Netflix, and Google, which is now known as Alphabet. Now, these companies all on their own have powered the growth of the S&P 500, the stock market as a whole, the economy as a whole, because they've grown so much. Even during the pandemic, remember when everything crashed in March, when there was a lockdown and everybody panicked and stock market went down? These companies started killing it. Like Netflix, usage was up, people are locked in the house, of course. Google, people need information. Amazon, people need to shop from home. So these companies have grown a lot, and that's why I think they're such solid investments if you're just starting out. And not on a day-to-day, if you're trying to day trade, if you go, look, I like this company, I use this company, they seem to be well prepared for any type of new innovation, because if a new company comes along, not only do they have to earn their place in the market, they have to get customers' trust who are used to using these guys over here. So that'll take a long time before that happens. So I find those to be very, very healthy investments. And again, the growth that they've had. And also a very important point that I want to just point out. When we talk about AI and technology, Amazon owns Whole Foods. Now, one of the biggest friction points to me is when you go shopping, you have to do what? You have to get there. Then you have to look around. Then you have to look what aisle is this in. Then you have to ask somebody. But if he's busy, what do? You wait. Friction point. Then you get to him. He probably doesn't know what you're looking for. Friction point. With Alexa, Amazon owning that technology, Whole Foods, what is there to say that we can't go in and go, Alexa, where's the milk? The milk is over here. And you go right there, sped up. And that's if you want to go. You can actually have it delivered to you. So these are just some of the technologies. You just got to have that foresight to see where the trend is going. It's really, really common sense. Now, in terms of growth, over the past 5 years alone, FANG stocks have generated 40+% returns annualized. So, it's all because of these technologies that I mentioned before. So it's something to look into and something that I personally like. So just to summarize, S&P 500, indicator of the economy, ETF, index funds, they track that growth. You invest in those, I personally have a friend that has $2 million just from doing this. Now, over time, not overnight, it doesn't happen like that. Even a quick score from the stock market takes like 24 to 36 months unless you're lucky. And if you do get lucky, just be well prepared and ready for the fact that it can go the other way, and it will go the other way too. I could tell you a story from last week where printed money and then it adjusted a little bit. So just things to consider when you invest in the stock market. So I always say, buy something that you, one, think will be here 10 years from now, two, that you understand and you know, and three, don't care for that money for the next 10 years, as mentioned. And you should be in pretty good shape because historically, if you look at it from that, with that investment thesis, everything that happens in between doesn't matter. If you're a day trader, all this matters to you. But if you look at the 1 to 10 year, boom, you're on fire in a good way. So that's what I would say.